Hello, fellow traders. 'Tis I, the rumpled one. It is Tuesday, April the 10th, the year 2018. Let's talk trading. Heck yes or no? You're probably wondering, what's that all about? Well, it has to do with making decisions. In trading, we're making decisions all the time. And in life, we have to make decisions. And I think I may have told you, I'm running for county commissioner here in my home county. And I was on a radio show yesterday. Maybe when they do the podcast link, maybe I'll share it with you guys, traders. But they asked me, they're asking me a lot of questions, and I'm getting questions on different organizations on these questionnaires, and they want to know my position on certain issues. Well, on certain issues, it's a definitive yes or no. It's like gun control. For me, it's like gun control is hitting what you're aiming at. No, I'm against gun control. So for me, that's like a heck no. And then they'll ask me another question about this natural gas pipeline. Well, you see, that's one of those things. There's so many pieces, so many parts, so many reasons why not. And to me, if it's not a heck yes, it should be a no. But on the other hand, I just can't do a blanket yes or no, because you have to, or one should look at each situation individually and weigh the decision on its merits. In one case, for example, they're talking about rural mining. Well, it may be a one location, it would be, yeah, heck yeah, that's a great idea. But in another situation, it's like, no way, that's crazy. So am I for or against it? It depends. So in trading, we have to make decisions. Do I take this trade? Well, if you've got to think really hard about the trade and you're looking at 20 different indicators and you're reading a bunch of news reports, it's like, no, it's too hard. But if a trade comes along where it's hitting the horizontal line and it's just like, oh yeah, heck yeah, I'm going to jump in. And maybe we should, let's look at the different charts today and see if it's a heck yes or a no. And when it comes to money and risk management, heck yeah. It's not a question. Yes, we're going to exercise good money and risk management on each and every trade, right? And yeah, I know you guys are probably laughing at me when this screen comes up. Anyway, well, let's take a look here at the weekly, it's got dollar yen on the chart. See, is there any heck yes trade? Well, let's see. If it hits this line, the 107, what's that? 483 line. It looks like it's going to break out at a weekly high. I would say that would be a heck yeah. Because, it might break a little, it might break a lot. But that's a trade I would take. And look at these gap trades. Weekly open gaps, those are heck yeah. Why? Because almost at the end of the week, you guys can go back and look at all my weekly updates and you'll just see it's filled. Now, usually we're only talking maybe a handful or two handfuls of pips, 5 or 10, maybe sometimes 15, maybe sometimes 20, but they add up. If each one of these was 5 pips, I forget, what's this, 28 pairs or 20 some pairs? If it's 20 pairs and you get 5, that's 100 pips. Would you be happy with 100 pips a week? Well, heck yeah. And here we go. Harry Hindsight. We hit the daily high. Take that trade on a green D1 candle. Heck yeah. Is it going to work every time? Heck no. Is it going to work most of the time? Well, we'll see. Let's see here. Do we have anything else close here? Well, let's see. These guys are near their daily lows. Oh, see, that would have been a heck yeah way back there. Guess maybe I should put up one of these and we can look at yesterday's. Yeah, maybe let me show you guys how to do that. Let's change this dashboard up here. So we're going to do high close, but we're going to look at yesterday's close. So here, bar number 1, bar number 1 for close to low. So now we're going to take today's close and compare with yesterday's high and low. Okay, so we're back 1. And so see right here, that was 67 pips. So let's see, is anything close? Oh, we got the pound, franc. Let's look at that. No, see, we got a green candle there. But once again, see, that would have been a heck yeah trade heading to the south side, right? Let's see, anything on the high side. Euro. Oh, here's one right here. I mean, that would have been a heck yeah, but it's already punched out 8 pips. We're right there. Now, it's already done it once. Maybe it'll do it again. I don't know. I like to try, like to get in on the first try, maybe the second try if the first try failed just by a little bit. Let's see, we had the pound dollars just did it. So, but you can see here that already ran what, 24 pips. So that would have been a heck yeah trade. So that's how you would set that up. Maybe I'll leave it that way for a while. What do you? Let me know what you guys think on that. If you want to see that. But you can see you can set up the dashboard so that way you can see those breakouts of the previous day. In this case, previous day's high or low. Let's see, anything. Well, here we go, Euro. Did Euro already break out? Yeah, see, Euro had already broken out. So in this case, it's high minus close, so a negative number means it's above. So let's keep looking here. So once again, we're looking at the buy zone. It's on the Euro right now. And as you can see here, what do? You know, Harry hindsight, you know, these numbers stay the same all day long. But you see here, right there, this is a heck no. Why? This is the Euro USD. This right here, this is the Australian. I think this is actually the beginning of the Asian session here. No, let's wait till London. We wait till the London session here. You know, maybe you stopped out, maybe you entered, but right there, you made money on that trade. Well, let's see. Let's put up another here. See here, when you're trading in the yen session, right there you go. Boom. There I go, sounding like John Madden again. But you can see here, right there was a heck yeah. Right? And so you can see here on the Euro, we put in a low, then we put in a nice high, and the red rats made some pips. Once again, we're looking to fade the pivot. There's the open, there's the pivot. You want to go short. Boom, hits the pivot. You take your money off the table. I mean, what was that trade worth? From open to pivot, looks like about 16 pips or so. Not a bad trade. Price action. Oh, let's see here. How do we do it? Oh, yeah, I remember. Green candle at the line, go long. Red candle at the line, go short. Okay, there was a green, a short. There's some waffling right there. But here we go. Green candle at the line. Boom. Okay, then we get a 3-ball. Red candle at the line. Red candle at the line. Red candle at the line. Making money the whole way. Harry hindsight always makes money, right? Oh, and we're looking at the 5 lines again. H1, yesterday's high, close, mid, open, low. Actually, maybe this is the chart. I should switch it on since we're looking at yesterday's lines. Yeah, This is the one we should switch it on. So once again, here's how to do it. I'll have to put the other one back. So we want yesterday's and yesterday's. So you see here that last push up came back down right there. Should have taken your pips off the table somewhere here. Simple, simple, simple. And you can see here dollar yen pop through. I mean, look at that. It's not too difficult. And just remember, usually during the week here, the yesterday's close, today's open is usually going to be within a pip or two, because there's not. That's it's just the way it is. There's no time delay really between the open and the close. But there you go. And here, as usual, we're looking at the wick zone. Price doesn't like staying in the wick zone. What more can I say? I mean, a wick zone trade is a heck yeah! Holo trade, once again, heck yeah! Look at that. I mean, you had one opportunity, and right here. Now remember, with the holo setup, usually you want to have a lower time frame candle open and then be heading south. So if you look at the 15-minute chart here, you see you had an open here, and this is your indication. But you see, in this particular case, you didn't have an open here. Now, maybe if you drop down to 5 minutes, there may have been. So right there, you can see you had an open. So you take that trade. Now it's reversing. So that's either a little pips or a scratch. I mean, how would you know to scratch? Well, let's take a look here. You see, there's a wick zone of this 5-minute candle. Price never entered it. Then the wick zone of the previous 5-minute candle, price entered and exit. Well, right there, you got two wick zones that it exited. Yes, lower time frame, and then it exited this one. So you should have, this right here should have been the key. That should have, right here was your first place where you might have said okay, but then said no, let's not be too hasty. But right there, scratch the trade. Just scratch it. Why, don't hit your stop loss. There's no reason to. You get another opportunity. So you see, that's how you do it. So here, it's like, do I exit? Heck yeah, I'm scratching the trade. It's screaming at you. And once again, we're looking at the tick chart here. And since I just opened the computer a little bit ago, opened my trading platform, I should say, there's not much. So traders, remember, don't make it difficult. If you have to really think hard about the trade, if it's not screaming heck yes, then just pass it up, because it's not what you trade, it's how you trade it. TheRumpledOne, join me in draining the banks.